Yes. Hello, guys. Welcome to another video. This is going to be a very important video for those who want to achieve consistent profitability. And today is the 2nd of July, 2025, and we're going to be reviewing and also um, analyzing gold price action. So, without wasting time, let us dive into it. First thing first, what makes a profitable trader? Or what will get you to consistent profitability in trading. This is for those who still haven't achieved that consistent results in their trading. They win, they lose, they win, they lose, they win, they win, they lose. Or this is just for some traders who want to upgrade their game, like they want to take it to the next level. This video is for you. So let's get into it. First thing first, focus on only one pair. I'm not going to tell you focus on two or three pairs. No, I'm not going to go into that bullshit. I want to be straight with you guys. Focus on only one pair. There was a time whereby I was trading gold, I was trading Nasdaq, I was trading US 30, I was trading Russell 2000, I was trading a lot of assets, even the German 40, the DAX. But see, the problem with these things is that when you have too many pairs, your focus is not going to be to the point where it's supposed to be. And you see, trading, especially for me with my trading, I'm so precise with the price and like I'm so precise on my entries. And it involves some maths sometimes. So things are gonna get so blurry when you have a lot of pairs you're dealing with. Like for example, right now, gold doesn't give you a setup, you have to wait. So you go to Nasdaq. You see, Nasdaq is almost ready. Like when you go to Nasdaq, maybe what you're seeing is almost ready. There are some things possibly you're going to miss out on Nasdaq. So whatever you call ready, or maybe Nasdaq is ready, is just a distraction. But when you take your time, analyze one pair from A to Z, you know this price is coming from this swing high. It's going down. Where is it going down to? We have bullish fair value gaps here. So this will be our possible targets. And that's exactly what happened here. Now, price, for example, assuming you were in here, you have analyzed, you can tell we have a liquidity point here and you have another one here. So we have two options. If you are going higher, we have to take this one and take this one, assuming we are in this area, okay? We either take this one and this one. Once we took this one, you see price reversed. When price is reversing and is giving us bearish structures, what do we target next? These bullish. And as you can see, yesterday, Monday this week, we revisited it and we start going high again. So expect us from now on gold to go higher and higher and higher. So bottom line is when you only trade one pair, you'll be able to understand it in and out, and that gives you ease of time. So you don't take random trades with the fear of missing out. You wait patiently and get to take trades that align with your analysis and strategy. So point number one, stick to one trading pair. Stick to one pair. That is point number one. When you stick to one pair, it will give you easy time to analyze. And apart from that, also you'll be losing less because you see, for example, let me give a very good example of something that used to happen to me. I would take a trade on US 30 because I feel like okay, price has come to my entry zone. But you see, trading is probability. You're not 100% sure that that trade is gonna win, okay? So I risk 1% on that trade. It lost. Okay? Later on, I see gold has come to my entry also as analyzed before. And I'd be like, okay, now gold is gonna do it. Let me take it on gold. Remember, this just land and session, okay? I take it on gold. It loses also because it is probability. I've not even entered New York session. Already I'm down 2%. When New York comes in, because now I want to trade, not unless you have that level of discipline that the moment you lose that 2%, you walk away, which is very hard to achieve, not unless you have some time, you have given it some time and you have the right experience in this market. So you see, you've already lost 2% trading two different assets or two different pairs in just one session. Now we come into New York, the same thing happens because you see with the trading, nothing is 100%. It is all probabilities. Okay. So number one, stick to one pair. That will give you an easy time and you'll be able to achieve so much. Secondly, most importantly, know where price is going to. Let me tell you something. Entries should be the least of your worries. Entries, the reason why people lose trades, or the reason why we lose trades most of the time, not actually most of the time, always is because we are on the wrong side of the markets. If you understand that the market is bullish right now, for example, it's going higher, what's going to be your interest? Just buying. If it's going down, what's your interest? Selling. But when you don't have the right bias or right direction of where the market is headed to, then definitely, you're going to lose. So most importantly, understand bias, understand where market is going to. For example, let me show you my bias for today. I was in longs. I was long in gold today, this morning, and I've won the trades 1 to 4 hour each. Okay, and this is exactly what I did. I'm not going to give you exactly my entry models because they are so specific and they are so hectic, and they deal a little bit with mathematics and so on. And actually, what I know or what I do or what I use right now for entries, this was given to me by God, guys. I can't really lie to you that I went on fasting and praying period, asking God for wisdom, and I started seeing some things that were mind blowing. So I'm not really gonna go into that right now, but in future, of course, I'm gonna lay it all out here for free, but only to the serious traders. Actually, I don't think for free because information is powerful. When you give it for free and to anybody, you don't know the damage they can cause. So either way, let me give you an example of what led to my bias. How I ended up having my bias for today. So I want us to pay attention to yesterday. No, Monday. Sorry, the day before yesterday. So we had this candle here. That's its high and this its low. Okay. So Monday took the liquidity below the previous week lows. Okay. Let me just confirm that. Okay, yeah. We took the liquidity before the previous week lows here, tapping into this bullish fair value gap. You see that? And Monday reverses. Okay. So when we're reversing, I want you to pay close attention. How did Monday close? We opened here, went down, took liquidity, came back, created that high, then closed here. This shows some interest of us going higher. As much as this candle is way more undecided compared, when in relation to the previous one, but as you can see, it closed back in, meaning that it is not interested in going any lower, given that liquidity here has already been taken. Perfect. So we come in the next day with the mind that price is likely wanting to go higher. So what do? We look for anything that deals with the buys. So anything that any setup. I don't know what you trade. If you trade ICT, you trade accumulation, manipulation, distribution. Those sessions. Whenever a sell side liquidity has been taken, you long it. You take your buys because we are in a bullish momentum or a bullish trending market. Okay, so for today, this is exactly what happened. I took yesterday's candle in relationship to the previous day candle, that is Monday. So how did we close yesterday? We closed very bullish, as you can see. We closed above. We like this like you don't even have to struggle so much to see what's exactly is happening here. This is a very bullish market, given that this candle closed above the Monday's and so when we came in today, I was just looking for possible buys. Now you look for maybe 1 hour, and this is what I did. Maybe let me give you a good example of what really happened here. This is the Asian range or Asian liquidity here, right there. And you see London came in, we purchased it, and I started taking interest there. Okay. And I think I exited my trade around somewhere here. Okay. That was really wonderful. And as you can see, we are still going to be going higher. We have to take this high. So if I wanted, I would have let it until here. But remember, today we have some news, and don't be greedy. If your strategy tells you to take 1 to 2, 1 to 4, Be consistent with that. The moment you become greedy is the moment you start losing. Just be consistent with 1 to 2, 1 to 3, 1 to 2, 1 to 3, 1 to 4, 1 to 5, depending on how what your strategies always gives you. Okay, so that was it. I knew that you were going high. And what was I waiting for? I was waiting for any liquidity to be taken. For example, this was Asian, this was liquidity resting below here. So once it was taken, now maybe if you're going to maybe let's take a look at 5 minutes chart. There are some people who always wait for breakout structures and so on. For example, that liquidity has been taken there, and they do have let's assume, yeah, let's say we have some breakout structure right here, that one there, and you wait for price to come into a fair value gap, you see, like this one here, putting your stop loss there. Like, I don't know what strategy you use. I'm not into teaching about strategies of entry models right now, but my biggest concern as of right now on why traders lose money is because they go against the overall trend. So you have to understand where the market is going to. You have to understand the draw on liquidity. Not only draw on liquidity, but you also have to understand bias. If you have one confluence that gives you bias, that's well and good. For example, the daily bias on what to expect on the day. But if you can have more than one, the better for you. If you can have more than two, even better. But remember, if you the more you have is the more responsibilities you're going to be having as a trader, because you'll have to you know do a lot because you have a lot of confluence to look for. For example, you have the daily time frame, you have to go to the hourly time frame, you have to go to the 4 hour time frame, you have to look at the market structure, you have to look at, you see, all those kind of things. When you put them together, they give you that confidence that yes, this is a high probability trade because they all align with each other. But sometimes when they're in chaos, for example, the higher time frame is telling you sell, the lower time frame are telling you buys. Remember, the higher time frame is always the boss. But at the end of the day, you have to be very, very careful in such situations. So I prefer have at least two. Two is fine. If you can just have only two confluences that gives you confirmation of where the market is headed to, that's more than enough. Just use that. So I hope you guys enjoyed that. So remember, again, stick to one pair, choose one pair. It can be Nasdaq, it can be gold, it can be Euro USD, it can be GBP USD, depending on what you feel like has been giving you a lot of money. And speaking of one pair again, I want to take a look at the most successful traders out there, even all over the world. You realize that most of them always trade one pair. Majority of them, you find that they only trade stocks or futures, and if they have any other pairs that they do trade, not only one, you find that this a trader who has been in the market for decades. You see, but if you're now coming to the market, you have now experience of maybe 2 to 3 years, or maybe 1 year, or maybe a couple of months. Leave. Stop trying to trade a lot of pairs. But still, you can trade a lot of pairs as a beginner, maybe a few months or maybe 1 year, trying to find the perfect market for you. Once you find the perfect pair that you can trade, then stick to it. And after that, you'll see big differences or improvement in your trading. So that's gonna be it for this video, guys. Hope you enjoyed. See you in the next one. Remember to hit the like and subscribe button, and let me know of what you think about the video. If you have any ideas that you'd like me to cover, generally concerning trading, and then I'll be able to take a look. Thank you. Have a good day.